In this video, I'll share with you how I'm using Bitcoin to plan an early retirement in Southeast Asia. As I share this information, I'll show you footage of me walking around in my favorite place in the world, Thailand. A $400,000 portfolio invested in Bitcoin-related securities is all I need to stop working and retire forever. By the end of this video, I'll show you the exact 3 instruments and allocation and tax structure that could mean paying no taxes. A few years ago, I decided to rotate my entire investment portfolio into Bitcoin. Ever since then, I've been aggressively saving and investing my entire surplus into it. When I say aggressively saving, I mean being more mindful about all of my spending habits as well as seeking higher paying jobs. Both of these factors combined have allowed me to build enough of a Bitcoin stack to reach financial freedom by the age of 40. Once I reach my FIRE number, I'll be able to rotate out of Bitcoin and move those proceeds into cash flowing assets. There's a couple of caveats that need to be explained. First, my plan is to retire abroad, not in the United States. In my home city, the average rent for a 1-bedroom apartment is $2,500 a month. In a Southeast Asian country like Thailand or the Philippines, a modest 1-bedroom apartment with all of the modern amenities, such as a pool, security, and a gym, can run anywhere from $250 to $600 depending on the location. Truth be told, there are apartments for even less than $250. Second, the cash flowing assets I'm interested in are Bitcoin-related instruments. Companies like Strategy and Strive have transformed into Bitcoin treasury companies, and they offer preferred stocks that pay dividends with Bitcoin as their primary balance sheet asset. Bitcoin treasury companies are a radically new thing in the finance world. To be a Bitcoin treasury company means to be a net buyer of Bitcoin and declare it on the balance sheet. So with those 2 important distinctions out of the way, let's get into the math. So mathematically speaking, with a passive spendable income of $2,500 a month, one can live well off in the Philippines, Thailand, Vietnam, or other Southeast Asian countries. Notice how I said spendable income. In order to continuously grow the portfolio and compound, for me, I will need to systematically reinvest a portion of the income in order to keep the portfolio growing as well as outpace inflation. So to have $2,500 of spendable passive income each month, I will need $400,000 in my income portfolio. So let's break down what this portfolio contains and how this all works. Instrument number 1, 70% of the portfolio is allocated to STRF. STRF's yield is $10 on a $100 share price. 70% of a $400,000 portfolio is $280,000 total allocation, which brings in $2,333 a month, or $28,000 a year. Instrument number 2, 20% of the portfolio goes to STRC, which is $80,000. STRC's yield is a variable yield that is subject to change each month. At the time of recording, that yield is actually 12%, but the math I did here is actually for 11.5%, so just know that the numbers I'm going to show you are actually better than this. So using that number, 11.5% of 80,000 is $9,200 per year, or $766 a month. Instrument number 3, the remaining 10% of the portfolio goes to the highest yielding instrument, SATA, which is $40,000. SATA's yield is variable that is subject to change each month, just like STRC. And at the time of recording, its yield is 13%. 13% of $40,000 is $433 each month, or $5,200 annually. All of these compose a portfolio of $400,000 with a blended yield of 10.6%, with a monthly income of $3,533 a month, and an annual income of $42,400 a month. After reinvesting 3% of the portfolio, which is about $1,000 a month, the actual spendable income comes down to $2,533 each month. So let me go through and explain the reasoning behind each of these instrument choices. First, STRF. This is a preferred stock from Strategy, which is a Bitcoin treasury company. Strategy offers several different preferred stocks, and STRF is the most senior, most preferred that sits ahead of all the other preferred stocks in their capital structure. The 10% yield is based on a $100 share price. So whether the price appreciates or depreciates, the dividend per share is always $10. I like STRF as the primary allocation in this portfolio because I like knowing that I'll be receiving a certain amount of income that doesn't vary. Actually, it will grow as I systematically and mechanically reinvest the surplus back into the portfolio. But what I'm saying is STRF provides a floor income. So next is STRC. This is another preferred stock from Strategy, and this sits below STRF in seniority. Its dividend is currently 11.5%. So as I've said, they actually just increased this the other day to 12%, but the math I did is for 11.5. So again, these numbers are actually better than what I'm sharing. So on 11.5%, that yield is based on a $100 share price. So since the dividend varies, the share price, since the dividend varies, the share price is pegged to $100. Meaning the volatility is usually about 1%. There have been occasional drawdowns, but it always returns to par. And STRC pays semi-monthly or every 2 weeks. Now the last instrument is SATA. This is sort of a diversity play to hold something outside of the strategy universe. STRC is, SATA is just like STRC. It is Strive's preferred stock, and 13% yield varies. And SATA actually pays daily dividends, which is attractive for some investors. Okay, so what do all these have in common? So one common characteristic of all of these three instruments are that their dividends are treated as return of capital. This means that the taxes are deferred until my cost basis reaches zero, after which point I could potentially be paying $0 in taxes due to long-term capital gains tax bracket. So as I mentioned earlier, the capital that I intend to deploy for this portfolio is currently in Bitcoin. Right now, the price of Bitcoin is at a very low dip in the cycle, which is about $64,000 at the time of recording. So how do I get this money out of Bitcoin and into this income portfolio so that I can go and, live this lifestyle that I want? All I have to do is simply wait. I only have to wait because the price of Bitcoin moves in cycles. And if history repeats itself, the current cycle will reach its top sometime between now and late 2028 or early 2029. According to the power law, this is the according to the power law, which is the mathematical model that Bitcoin has followed since its inception, by January 2029, the price of Bitcoin will be no lower than $131,000 per coin and no more than $1.1 million per coin. So the median price at this time will be $370,000. So today, Bitcoin's current price of $64,000 is near the floor price of the power law. So what I need in order to do this is nothing crazy. All Bitcoin needs to do actually between now and January of 2029 is to revert to the median price, the median value of the power law. So if and when that happens, I'll be able to execute my plan, take these net proceeds and reinvest them into cash flowing assets. So to summarize why I like this portfolio and all three of these instruments, They have deferred taxes followed by potentially zero tax. There's no expense or management fees. They still are related to Bitcoin. And 70% of this portfolio, as I've said, provides a fixed floor income that alone would more than cover my living expenses for this type of lifestyle. And last is that regardless of what the market is doing, if the share prices for any of these instruments increase or decrease, the portfolio still pays a fixed amount of income because all three instruments, the yield is based on a $100 share price. So I think that all of these things, geographic arbitrage, Bitcoin, these Bitcoin-related financial instruments, I think these are not for most people. I completely recognize that. But then again, me personally, I've never been like most people. I've never liked doing what everyone else is doing. So I have no hesitations about living abroad in this sort of frugal lifestyle, eating street food. And to me, the appeal of that, why that's okay, is because all of my time would be to myself. I would own my own time. I wouldn't have to show up at any daily meetings, wouldn't have to answer to a boss. And to me, I can't put a price on that. That's the most important thing in the world to me. So like I said, I don't want to be like other people in that regard. I don't want a big house. I don't want a fast car. In fact, I sold my car 2 years ago, and I've been using my bicycle for transport. So to close this out, if any of this resonates with you, hit subscribe to follow me on this journey. And for more information on this lifestyle, just hit the like button because it really helps me out. Leave your questions below, and I will make another video about all these topics.